equity markets perhaps is facing one of its most choppiest time. Also with another exchange in the form of MCX SX expected to be launched in the Indian markets very soon. Where does the Indian equity markets go from here? Also on the other hand, some regulatory changes expected. What are the challenges? To discuss all this and much more, we have with us Mr. Ashish Chauhan, Interim CEO of India's oldest stock exchange, BSE. Mr. Chauhan, as always, thanks for sparing this time. To begin with, if I could ask you, we are standing on one of the most iconic locations of Mumbai, BSE. BSE itself has seen a lot of churning off lately, a lot of exits in the senior management. You have been holding the fort. How has it been for you as an interim CEO? Because this is also a time when equity markets in itself are going through challenging times.
The way we look at it is over 3 years, last 3 years we have had a particular strategy which was basically working on the people, the products, the distribution, the technology and processes. And practically what we are doing now is basically in continuation of that strategy on getting the best talent in BSE, and also with the brokerage houses getting sort of attracted to BSE now, how to kind of continue to engage with them. In terms of the technology, we have now improved our framework, and now we are able to provide mobile technology, we are able to provide transaction processing time which is amongst the best in the world. We are able to have a number of orders in the range of 7.5 crore, 8 crores a day, which was unheard of in Indian markets before. So over last 3 years we have had several changes, including in distribution framework, where we have got more than 500 new members coming up to trade on BSE from cities which were traditionally not what we call equity centers like Jorhat or Dibrugarh or Raipur. And so we have kind of made several impressive steps in various directions, and our current framework is basically building on those steps we have taken in the past and kind of leveraging whatever achievements we had. So in last couple of months we have seen all the efforts which we have made over last 3 years as kind of bearing some fruit in form of the derivatives volumes going up, and on the other side even equities, equities market share, which was going down on a month by month basis, has now been stalled. So for us it's a very important sort of phase we are going through, by which we are able to realize the fruits of the hard work that took place.
Particularly coming to the derivative aspect before we discuss to the other aspect, that was one link which BSE always has been struggling and working hard to get its act right. Now off lately there has been a lot of success that you are seeing, that your derivatives segment also getting stabilized, a lot of new technology being put in, also crossing the 1 lakh crore mark. How has been it for BSE on the derivative aspect, and what is that you're going to go forward so that you can sustain the volumes?
See, the way, as I also mentioned earlier, the processes do matter, products do matter, technology does matter, people do matter, and distribution. So basically if we have enough distribution across the country, FIIs as well as QFIs, we are also taking leadership in QFI areas. Also the local sort of currently 2% of India invests. How do we make it 10%? That is 5 times more, right? And basically that's where we want to have increased distribution in derivatives also ultimately.
How is the breakup now for you, FIIs, QFIs, all the verticals?
See, the idea is to work with everyone in different areas, whatever their needs are, slowly build them up into your systems and processes and products, and slowly all of them keep on coming. So one market that has come sort of recently has seen some action is in derivatives, and we think it's a very, very positive development, that it gives you that ability to think that, okay, what you are doing is in a correct direction, right? So you are serving somebody's needs, and that is what is now bringing the people to trade on you. And one of the biggest things, more than what I call anything else we have seen, is what I call the cost platform. That as an exchange we would not measure ourselves on the volumes, because for us what is important is about investor protection, investor sort of giving fair, efficient, transparent markets, giving safe markets. For us, we would like to measure ourselves more on those kind of stuff rather than a race on volumes, which may not be the only way to measure. And we think there are basically serious issues on measuring people by a particular, only one single dimension, however important it may be. And so for us, current activity that is started coming up in derivatives has kind of given us that hope that we are able to meet people's requirements in a modern way, because 10 years BSE did not have derivatives, and on 11th year you come up and you start having pretty large market share in a very short time, and it's not something which just happened overnight. Over several years, a lot of hard work has happened. Technology
We are
has been
confident of
changed.
sustaining it?
And
Because
why
that
not?
has been the challenge. Even earlier when BSE
Correct.
was there and then it came out, the challenge has been sustaining it.
And this time our basically the issue which we look at is more on the cost situation, that how costly it is to trade on our platform vis-a-vis the competition. And today we think we give a significant cost break compared to the competition, and with similar liquidity. We think people are going to stay, and that's why when this BSE 100, the new contract that came up in the first week of August, now we are probably 2 weeks into the contract. Today is 13th, right? So we are less than 2 weeks into the contract, and that contract is trading 35-40,000 crores a day, and which frankly speaking, a lot of experts even from the fraternity also told us that if you do 100-200 crores a day kind of numbers in first couple of weeks, you will be all right, you will be successful. And suddenly from day one, it is doing 25,000 crore, 35,000 crore, then you know there is something which is clicking. What is clicking now when I look back? In fact, people ask me why you didn't start this earlier. And again, you can be wiser in hindsight, right?
Yeah.
But our perspective was very simple, saying we will continue to try newer things. One of the requirements or one of the suggestions from the market was that why don't you give an index which is in the range of 5,000, so that it's easier to arbitrage, it's easier to give two-way quotes on options and so on and so forth. And we have been toying with this idea frankly for quite some time, but in a sense when we launched it, we didn't know the acceptance that will be so good. Similarly, the cash futures spread product is kind of people are testing just now.
I'm sorry to interrupt, Ashish bhai. If I could ask you, then is it right in saying, if I could put it this way, A, the cost aspect, and B, you are ensuring that your penetration is coming from tier 2, tier 3 cities.
Absolutely.
And the base is increasing, and that is what your game plan is going to be?
And also not only how do I segment the market, take care of each market. So if there is a jobbing market, how do I take care of that? If there is an algorithm trading market, how do I take care of that? If there is a tier 2 market which is say more mutual fund oriented or insurance oriented, how do I kind of service those needs? So as an exchange, we provide several services, trading in equities, in equity derivatives. We also provide trading in debt, in mutual funds, even in SME stocks. And so we would want to be sort of providing different facilities to different people and kind of take care of their requirements by segmenting each and every segment well, which is large enough, creating a liquidity pool by attracting people. And that would also include FIIs, people who basically give two-way quotes, even the QFIs. For me, QFI is going to be a very important
But how has been the response to begin with?
QFI, the first trade happened on BSE last month, although it has not been well publicized. But qualified financial investors can act as a kind of a buffer or more than buffer, some sort of a balance vis-a-vis FIIs, because it's a different type of investor population. And that's where we are pretty hopeful that if we are as a country, so for us QFI is going to be an interesting development, and if as a country we are able to attract that investment, it could be much longer term, and it will also give you a kind of a different type of investor class. And so we want to cover the new and up and coming sort of what I call demographic dividend of India, that is the youngsters who are coming to the job market over the next 20 years.
But any mix that you're looking at, say internally, you would say down the line you would want to have a mix of this much of QFIs and FIIs?
It would be difficult to say at this point, but idea is at different points in time, different requirements come up from sort of different groups, whether it is retail investors or mutual funds, Indian origin mutual funds, or Indian brokers or Indian jobbers, and so on and so forth. So we are basically trying to keep ourselves nimble. For us,
keep that flexibility.
Yeah, the name of the game is about being nimble on products, on processes, on people, and that's what is going to finally, because the world is changing fast, the needs of the people is also changing fast, the products they require also may vary, and how you are adept at creating products which give you end-to-end experience in financial markets is going to be very important. Ours is what I call a mass market, retail mass market, and we need to be basically very simple. We need to create products which are simple, easy to understand, easy to trade.
Mr. Chauhan, if I could come to the macro picture, as I was just mentioning in my opening remark, MCX SX is the exchange which everyone expects to be launched shortly, maybe 3 to 4 months down the line. India traditionally has been used to two big exchanges, NSE and of course BSE being the oldest. Would it in a large way going to change the dynamics in the Indian equity markets, a third exchange now entering the fray? How are you looking at it being the oldest in the market?
See, from beginning BSE always had competition. There were Calcutta Stock Exchange and Ahmedabad and Delhi, and there were 22 exchanges before actually NSE came into the picture. So in sense, competition is not new. Indian market has benefited a lot out of competition. At the same time, for us, our aim would be to provide what we call a most transparent, fair and efficient market, most safe market, and that is what we would continue to work for the investors.
But at this point of time, does the market have that appetite, the way equity markets have been doing, say particularly because of also the global factors? Does the Indian equity market have that appetite where one more exchange can come in and have its pie?
See, for us again, as I would reiterate, the aim is to work on your strengths and what you can provide or offer to the investor community, be that retail, be that institutional, be that foreign or Indian or manual or algorithmic. You would want to work on providing better services, fair, efficient, transparent markets, safe markets, secure markets.
Would cost be one of the biggest factors now going forward? Do we see more churning happening in the market after MCX SX?
See, cost in India, as I say, is always a high value for low cost market. We as Indians always work on the cost aspects quite a lot, and rightfully so. And so for me, it has always been a factor. But the cost, you have to look at it from overall perspective. That is, there is an impact cost and there is a cost of, because the transaction cost comprises of several factors. One is, the largest cost is the liquidity cost or impact cost. The second important cost is the transaction taxes. Third important cost is the exchange taxes and stamp duties. And fourth is on the back office, front office, manpower, and all these costs put together. How you are packaging and giving a sort of a good product to the investor to meet his or her requirements is what finally will kind of...
Ashish, by now you have the oldest and seen the Indian equity market from very close frontiers. Isn't going to be a reality that we see a price war happening once MCX SX comes, at least to begin with, to say for 6 months?
And again, for us, see, the way we have always worked, and 137 years is a great legacy to have. So for us, BSE has continually worked on providing the best services, the most cost effective, what I call practically amongst the lowest costs in the world, and sort of fair, efficient and transparent markets for everyone. The idea of BSE is that we need to attract the smallest investor should feel comfortable trading in stock markets. And finally, what is a stock market, right? It's a transaction processing framework, right? But there is a much larger piece of investment which is actually standing behind that. What you do on the exchange is basically matching, trading, clearing. That is, matching is trading, and then you do risk management, and then you do settlement. But once the stock comes into the investor's account, it's the relationship between him and the company which is about corporate governance, which is about sort of having that trust in the management, also about the company's profitability and so on and so forth. So for us, the exchanges have two roles to play. One is giving a good transaction processing platform, which is what everyone tries to worry about in the cost part of it, and many, what I call, many research papers, most research papers are on those sides. The other part of it
has to be a
which is also
bouquet that has to be offered,
right, which is, and see, the good thing is that the same companies are listed or trade on most exchanges, right? So in a sense, the investor gets a chance or choice to trade on any company, buy it at the lowest price or sell it at the highest price, because that would be the framework. That's why we have also been providing the smart order routing and other, I mean, we have been championing such causes for investors' interest, right? And so,
if I could just coming back to BSE specifically, BSE did go through all the demutualization process. Then IPO has been in the pipeline for very long time now. It has been not been able to do for various regulatory reasons. Now that the regulatory clearance is there, the roadmap is there, is BSE once again ready with its IPO plan, and what is the roadmap that you would like to give to the investors when it comes to BSE?
See, BSE as a company, because BSE is also a corporate now, and it has more than 6,000 shareholders, right? So, and many of them want the company to be listed, and as you rightly said, from demutualization days onwards. So there is a sort of perception, and there is a need for BSE to list now that the roadmap has been completely clarified from the regulatory perspective. BSE is now working in a very systematic manner to reach that goal of listing, and it has divided the goal into several sub-goals. And so we think we should be able to list over say in early 2013, in probably second quarter or first quarter
of 2013.
Yes.
This is one of the biggest thing that you are mentioning, because always it has been, we are looking at it, but you have set a time frame saying that first or second quarter of 2013.
And it's basically board of directors of BSE has set this target for the management to achieve this in terms of, and they have gone through all the details of how we are going to sort of
if I could ask you, what would be the valuations at this point of time when it comes to BSE as a corporate exchange?
See, currently whatever gets traded, because there is a over-the-counter market on BSE, which we basically don't get to know.
Keep fluctuating,
right? Yeah. We don't get to know, but the fact is BSE has a huge brand name. It has even other brands like Sensex and sort of BSE 100, even CDSL and so on and so forth. So in a sense, BSE has the assets. It has what I call, it has more intangible assets in addition to the real assets, and somewhere on the line it is an iconic.
You don't want to put a value to it?
See, for me, investors have to put a value. We will basically do our best to make the information available to the investors to make the sort of judgment.
Just also looking at from the other aspect, the whole debate now, although regulator has come out with a roadmap, always has been, how does the exchange create that Chinese wall between its duty as an exchange and also as a corporate? Now once the listing happens, globally there have been dual listing which have been allowed. What would be the kind of format, or what are the options that you're discussing with SEBI?
See, SEBI has debated and now come out with very, very clear answers on how to sort of maintain this balance. So to say, every aspect of managing the exchange has been debated well, and also kind of a framework prescribed on how to go about doing this. One of the biggest changes that was required to be done was to set up a separate regulatory framework which is different from the business aspect of it. So and basically we regulate the companies and we regulate the members, right? These are the two large aspects.
So how does it work, say, if I'm going to invest in BSE now, how it's going to work? There will be two separate management once the listing happens?
No, there is a
how framework, the division of work
the framework which SEBI has prescribed has basically foreseen a CEO, and the regulatory framework also reports into CEO through the committee, regulatory oversight committee, and the business part of it also reports into the CEO. So in a sense, SEBI has already prescribed that, and we have to basically continue to follow what has been prescribed. So in a sense, our job has been made easier by this sort of new regulations, which are reasonably clear on what to do when it's not only about listing. It's not about
lot of things which have to be taken.
Not only that, it's not that the exchange which get listed have to do this. All exchanges have to do this. So even if
for
an
you
exchange
to be added thing
right,
that you'll have to look at.
So if an exchange decides not to list, doesn't mean they don't have to follow the same regulations, right? So it's not about the SEBI regulations are very clear and very specific on exchanges how to regulate themselves and how to create checks and balances and organization structure, which basically takes care of the interest of the investors who are investing into the companies which are listed on the stock exchanges, right?
Ashishkumar, do you feel that needs to be done from the policy and regulatory perspective at this point of time for the equity markets as a interim CEO of country's oldest stock exchange?
Yes, see, for us, India has come long way over last 20 years in terms of creating a very, very safe market. And we need to basically continue to invest time, efforts, energy into what I call minority shareholders' rights. It's a very important issue which will continue to what I call be at the center of what I call capital markets, that ultimately a person sitting in Jammu, if he invests in a business in Chennai, he is never going to meet the owner, or he's probably never going to visit the factory or business place. But he's investing with a complete faith in the system, saying any problem system will take care, you know. And that system includes the regulatory agencies, the exchanges, and the works, you know. And for me, how do we improve that trust of that small investor?
Or get the regulations right for minority shareholders?
And not only regulations right, but also implementing them well, getting even companies. Many times company management may not be aware of the implications of their decisions. And so sometimes there may be confusion about those decision making. So how do we also continually educate the investors, continually educate the companies, and create a win-win situation, and at the same time the trust in the system has to be enhanced. So for me, that's a very, very sort of important aspect of the capital markets, which of late I have seen less debate on that aspect of life about
investor activism particularly.
Not investor activism, more than investor. So for me, it's more about the corporate governance that comes from within the corporate, right? And how do we ensure that the system surrounding the entire framework is robust to ensure we don't allow any sort of issues to, and anytime there is a there is a decision to be made, it should be in favor of a small investor, okay, right? So,
and my last question before I could wind up. Last time we saw what happened when the markets trading hours were extended. Now with another exchange coming in, do you see that the market has got the appetite? If at all we see the extension happening, say till 5, which has been a debate for a long time, or do you feel with your experience that this is the right kind of framework that we should work in when it comes to market timings?
See, for me, again, times do change, people do change, new stimulants come into the framework, not only for timing, for variety of the, including products. I'm sure there will be much more innovation going forward in products, in various other things, and including technology, processes and so on and so forth. And basically BSE has a running nation with what I call a large presence in the Indian financial markets, will have to also adapt itself to any changing scenario.
But personally, are you for extension of market timing?
For me, it's never an individual decision, right? It is always about basically the entire system, ecosystem as a whole. And so BSE would not do anything which is not going to be discussed, debated, and any decision which finally comes out would have a stamp of approval from all the different types of stakeholders. So that's how we would want to kind of move forward. BSE has always done it, so it's not something new to BSE in that sense.
Mr. Ashish Chauhan, hope now with the foundation being laid for BSE, where it's ready to take off, you will be leading the team very soon, and hope to see you in the full-time CEO's role very soon. Thanks a lot for speaking to us. It was a pleasure talking to you.
Thank you. Thanks for calling me.